Welcome to Profit Insights, your go-to podcast for untangling the latest twists and turns in the financial markets. I'm Dusty, and today we're diving into the mixed bag performance of U.S. equities on July 5th following the Independence Day break. Let's kick things off with a quick market overview. The Dow Jones had a sunny day, adding 400 points, with financial and industrial stocks leading the charge. Meanwhile, the S&P 500 and the tech-heavy Nasdaq didn't fare as well, dipping slightly. Tech stocks in particular faced some pressure, partly due to the ongoing tariff narrative and a bit of drama surrounding Tesla's Elon Musk and the White House. Speaking of tariffs, the July 9th deadline looms large, but many investors remain unfazed. Instead of fearing drastic changes, they're hopeful that any adjustments will be minor. Both the S&P 500 and Nasdaq have recently enjoyed record highs, and it seems like most investors have priced in potential outcomes. Rate futures are also reflecting this cautious optimism, steering away from expectations of a July cut from the Fed and settling in on a couple of reductions by year-end. Now, let's zoom in on some corporate movers. Datadog caught attention, leaping up nearly 10% due to its inclusion in the S&P 500, spurred on by passive investment interest. On the flip side, Tesla slid over 5% as Musk's commentary on the tax cut bill stirred concerns about policy unpredictability affecting its operations. And in the travel sector, TripAdvisor saw a boost after Starboard Value took a substantial stake, hinting at potential strategic changes. Turning our gaze to the bond market, U.S. Treasury yields are climbing, driven by tariff talks and Fed speculation. Meanwhile, the U.S. dollar is having a tough time, posting its worst first half since 1973. This drop has significant implications for multinational corporations and emerging markets as we navigate the back half of the year. In the world of oil, OPEC Plus surprised the market by agreeing to increase output more than expected. This move helps balance global supply amidst uneven demand recovery, especially if we consider the economic challenges facing countries like China. On the economic front, the U.S. labor market continues to show resilience. With non-farm payrolls surpassing expectations and the unemployment rate ticking down, we're witnessing robust job growth. This solid footing in employment gives the Fed some breathing room, explaining the recalibrated expectations around rate cuts. Looking ahead, all eyes remain on the tariff deadline and upcoming economic indicators. Traders will be watching consumer credit numbers and the ISM Services Index closely. If the data show signs of softening, we might see some recalibration in rate expectations. Conversely, surprises in trade policy could shake things up once again, impacting investment strategies going forward. That's a wrap for this episode of Profit Insights. Thanks for tuning in, and remember, when the dust settles, only the truth remains. Until next time, stay informed and keep your eyes on the horizon.